So my talk is about how I earned $400,000 a year in passive income. This is a breakdown of my talk. I'm going to start with my story, give you a little bit of background. I'm going to share with you my investing strategy. I'm going to give you examples of some terrible investments I've made. I'm going to give you examples of some good examples I've made, and then we'll close it out with my takeaways and my learnings. All right, so my story. I was born in Brooklyn, New York. My parents immigrated from Israel. They came here with very little money, and they spoke no English. And so the entrepreneurial path was really the only option that they had available to them. My father purchased a taxi cab and drove a cab around Manhattan. My mom started a dog hair grooming salon. So the entrepreneurial journey was really the only path and the only kind of archetype that I knew growing up. So as Andrew had alluded to, I started my first business when I was 13 years old, 12 years old. My mom, I was in a Sears outlet store in Simi Valley, California, and there was this plastic tube full of 1-inch gumballs. And I had my Casio Databank calculator watch, and I did a calculation. Cost per gumball was 4 cents, and I turned to my mom and I said, I think I could sell these for 10 cents. So she bankrolled me and bought me the gumballs, and I took them home, and gum was not allowed on campus, so I had to do it all incognito, drug dealer style. Filled up a plastic baggie full of gumballs, put it in my inner coat pocket, showed up and started slinging that gum rock. And before I knew it, I had a clientele, and I was making $8 to $10 a day, well on my way towards early retirement. And this was one Hanukkah, I think, when I was just kind of just basking in my wealth. In my late teens, I started a bubblegum machine vending route. I bought a bunch of those 5-foot spiral gumball machines, and I set up a vending route throughout Western Washington where I would set up the machines and service them and collect the money, and was doing pretty good with that. And then that transitioned to my first e-commerce experience in 2001. I started igumballs.com. This work of art before you is my design. I had very little money at the time. I had about $1,200, and I couldn't afford both a programmer and a designer. So I hired the programmer for $800, and then I went back to community college and took a Photoshop class to learn how to design, and I designed what I thought was the most incredible looking website ever. And I know what you're all thinking, who needs Carson when you have this design genius before you? But I'm not for hire. And it would come as no surprise to anybody here that I won the coveted Website of the Year 2001 award. No. This was just an awesome journey. And this is days before Instagram. Newspaper coverage, ridiculousness. This is really embarrassing to see. It's really large. So I ran it was igumballs.com, and then I had the opportunity to purchase the domain gumballs.com, and so the website became gumballs.com. I ended up selling gumballs.com in May of 2008 for $1.75 million. This is a copy of the deposit check, and then I took a seller's note for the balance. 2008 was an interesting year of transition, both for me as well as the general economy. As many of you will recall, it was a very, very difficult time. And at the time, I had a few businesses, but essentially 3 core e-commerce businesses: gumballs.com, which I sold, and then I had a popcorn business and a gadget business. And shortly after I sold, my other 2 businesses started to decline. And in 2011, I started to get into negative territory, and it was, but this is a copy of my 2016 business tax return. I was losing between 2012 to 2016. I was losing 6 figures every year. I was falling apart, both in business and personally. I was bouncing around, moving from city to city, living out of 2 suitcases. broke up with, just went through a really, really bad breakup, moved back to LA, moved in with my brother just so I can be with some family. Yeah, I was in bad shape, drinking, pills, grams, just trying to cope and get through it. And it was definitely a difficult time. And I had this realization that I can't depend, I'm not gonna have, not everything I touch turns to gold, and I'm not gonna have consecutive wins. And success really isn't guaranteed, and just how important it is to have a backup plan. And I had started investing in the mid-2000s, but it was around this time when things got really scary that I really started to hone in my strategy. And so we'll jump into that. I got a lot of inspiration out of these two books I read when I was in my early teens. I'd highly encourage you guys, I'm sure most people have read these books, but they're really fantastic. And then of course this guy, and this quote is really the genesis of what drove my investing strategy and my passion for investing. So I could be like this guy if I choose to be on any particular day. And so to me, it's really about financial freedom. And the way that I define financial freedom is having passive cash flow that offsets that's greater than your cost of living. Now, don't get me wrong, I love being an entrepreneur. I love running my business. I'm going to continue running my business till the day I die, but I want a backup plan for myself and my family that's going to take care of me no matter what happens with my business. So, it's really important to be really focused on what your target is. So cost of living, this is my cost of living in 2019. You can see where my priorities are. I have a really beautiful home. I spend, growing up, being poor, in my mind, being wealthy meant going to nice restaurants, which at the time, in my mind, meant Applebee's, and traveling well. And so that's what I focus on. And you can see what I spend every year. This is a breakdown of my net worth. There isn't a ton I would change here. You can see I have about a quarter of my net worth wrapped up in my business. I'm sitting on more cash than I ideally would because these are frothy times, and I'm just kind of waiting for opportunistic opportunities, and I'd have a lot less money in startups. We'll get into that. All right, let's get into my fuck-ups, shall we? Terrible investments. So I made a lot. Startups. I invested in a lot of startups early on, and I regret nearly all of them. They're super sexy to talk about when you're at cocktail parties, but honestly, after being through everything that I've been through, I think there's nothing sexier than owning a self-storage that's earning 12% cash on cash. Problem with startups: no cash flow, no clue how they work. Most of the startups I invest in, I really had no idea what they are, what they do. And then in order to get your money back, they need to either be acquired or go public, more than likely. Raw land. I started investing in real estate in 2003, 2004, when the market, similar to today, was white hot, and I couldn't get into a lot of buildings, so I ended up buying raw undeveloped land, lost money on all of them. No cash flow. You have municipality risk. You have to, you need permitting, and then of course development risk. Domains. I made the mistake. I misinterpreted what happened with gumballs.com. I assumed that there was just a lot of money in generic domains, not realizing that what really drove the value of gumballs.com was the underlying business that I had attached to it. And so I bought a series of generic domains, lost money on all of them, no cash flow. Value is highly subjective, and of course they're very difficult to sell. All right, so I've got a bunch of investments, and I tried to extract a handful of examples that really kind of drive home the thesis here. Self-storage. So I met a guy in Portland through my entrepreneurs organization, and he had a network of self-storage facilities that he would buy throughout the western part of the United States. Really sharp guy, highly ethical, track record of success, and he just crushed it. Like, his branding was on point, his numbers were awesome, and I decided to invest alongside him. So I had purchased 2 properties. I invested in 2 of his properties. I put $100,000 in each property. He was able to stabilize them within a few months after he had acquired those 2 properties. They were within a few months earning 8% on my money in quarterly distributions. And I put tax-free here just because with real estate, you have depreciation that offsets your income. And so you're essentially earning tax-free until you sell. He was able to refinance these properties after 2 years, and we were able to extract about 80% of the initial capital, so about $160,000. And then after 4 years, he sold 10 of his properties, including the 2 that I invested in, and it was a total return of $596,000. That's inclusive of the $200,000 and the 8% that I earned along the way. Airbnb. I was in San Diego, and I was hanging out with a buddy of mine. We were watching football, and he had his laptop open, and this buddy has a property management, Airbnb property management company, and he specialized in the San Diego and the Palm Springs market. We were watching football, and I was looking at his laptop, and he was showing me his properties he was managing out in Palm Springs, and I was looking at the revenue, and it was staggering. Like, they were all 6 figures. All but one was 6 figures. And so he'd been doing this for years, and he was a genius at finding the right property, understanding the municipality, marketing on this platform and others. And so I told him I was interested. And so he helped me locate this property. And I purchased this home. This is in Cathedral City, which is just outside of Palm Springs. I purchased it for $380,000. I put $75,000 down. I spent $60,000 in rehab and furniture. So I had a total of $135,000 cash in the deal. And this property, that home, generates $120,000 in gross rent per year. I pay him 20%, and then there are all the associated fees of owning real estate, and that generates a $40,000 a year cash flow, which is a 29% leveraged cash-on-cash return. That property is appreciated $40,000, and then the renters are paying down the debt every month. College rental, similar circumstance. Another friend that I was introduced to in San Diego, and he had a property management company that specialized in homes around San Diego State. He owned and managed 60 of these homes, similar to this home. And he really understood that marketplace, and he understood how to market to college students and get these above average returns. So again, I told him, I'm interested, let's find a property. And so he helped me locate this property, and I bought it. I purchased it for $565,000. I put $115,000 down, spent $20,000 in rehab, and so I had $135,000 cash in the deal. So that generates $59,000 in gross rent per year. After his management fees and all the expenses, that's a $28,000 a year cash flow and roughly a 20% leveraged cash-on-cash return. That home is appreciated $150,000 since I bought it, and then the renters are paying down the debt. All right, concert tickets broker. This was an interesting one. So I was introduced to a young guy, and we had lunch, and he was a hustler, man. And he had been, since he was in college, really figured out how to buy and sell concert tickets. Like he developed this software that helped him identify not just artists, and sometimes random artists, but artists in particular venues, and can predict particular shows that would sell out and would sell at a premium in the secondary market. Not only that, but he was a genius at finding pre-sales of tickets that are available to all of us, but he had he put in the time to figure out how to get these deals. So essentially buying low, selling high. And he was doing really well. And I asked him, like, what's stopping you from growing? He said, really just capital. Like I've been hustling on my own since I was a kid, and I use credit card debt, and I have a little bit of money on my own. And so I said, look, you're already putting in the research, you're already putting in the work to identify an opportunity. And let's say you find an opportunity, you buy 5 tickets. Instead of just buying 5 tickets, why don't you buy 10? You buy 5 with your money, and you buy another 5 with mine. And whatever we make on my ticket, we'll split 50-50. And so we were just getting to know each other at the time, and he didn't feel comfortable taking in money. And I just followed up with him every quarter. I set reminders. And then after a year, he said, let's do it. And so I gave him initially like $5,000, and he did really well. He just crushed it. And so I grew my money, my investment with him. We continued with this 50-50 profit split, and that's been earning me about 37 to 41% per year. Hard money. So I'm going to briefly explain what hard money is for those of you who may not know. So in the real estate business, if you're a flipper and you're buying a property and you fix it up and then to sell it for a profit, you typically need debt. You need money to do that because these things are expensive. You can go the traditional banking route, which is just to go to a bank and apply for a mortgage. But since 2008, that process has become very difficult and really quite cumbersome. And sometimes these flippers need money very quickly, right? Because opportunities come and go. And so the hard money route is another option. And so a hard money lender is, unlike a traditional bank, a hard money lender can lend very quickly, like within 2-3 days sometimes. And they charge more for it. They charge a higher percentage plus points. Up to maybe 12% and 4 points on a deal. And the hard money lender is less interested in the borrower's income, and they're less interested in the borrower's credit. They're really focused on the value of the asset. And they want to lend at a very conservative loan to value so that if that borrower defaults, they could take that property back. And so as an example, a flipper might find a property that's worth $100,000 and they need money. So they'll go to the hard money lender, and the hard money lender will assess it and maybe give them $60,000. So a 60% loan to value. And then they're in a first lien position. And then the flipper does what they do, and hopefully everything works out great, and they fix the property and they sell it and they make their money and they pay back this short-term loan. If they don't, then the hard money lender will foreclose. So this was in 2008, so things were really rough, and I met a guy who had a hard money fund and lost his shirt up through 2007, and then was restarting. So had the experience and hopefully had some learnings. And so I started with $50,000 with this guy. I was one of his first investors. And it was just like right place, right time, and it just like took off like fire. And he was taking these loans, doing them, and then selling the loans off, keeping the points, and then lending the money over and over again. This was earning 2% per month, and I reinvested every dollar I had every quarter, and that grew to 1.3 million in 10 years. All right, so takeaways. Like when I stopped to think about all of my every place where I lost and every place where I won. To me, the secret to above average returns are investing in really smart people who execute creatively. Like when I think about the ticket guy and the Airbnb guy and the storage fund, like these were really, really smart people who found their lane, and they stuck to that lane, and they're super focused and they're super targeted, and they found creative opportunities within that lane, and they just outworked creatively to succeed. Operational excellence is everything. That's another commonality that all of them had. They just had their operations down, super focused, super clean. The reports, everything. Cash flow is king. I won't invest. I will rarely invest anymore in any opportunities that don't generate cash flow. There are plenty of opportunities out there to invest in a lot of things that don't cash flow, but there are also really, really good, sound businesses that are cash flowing, and they just need help to grow. Compounding returns. This is far from a get-rich-quick program. This is just a series of small base hits that I've had and accumulated and have reinvested over time. And the magic of compounding returns is where you see the success in the long run. So this is a culmination of like the three, if I were to simplify and come up with 3 rules and back test them against everything that every place where I lost money and places where I made money. The place where I lost money typically would violate one of these, if not more of these 3 rules. So rule number 1, invest in someone you know and trust. Really, really important to identify ethical, caring, hardworking individuals that you have a sense of trust in, you have a relationship with, or maybe you're part of a business network or a social network where other people have invested in that person or can vouch for that person. We work so hard for our money, and it's really scary to cut a check and give that money to someone else, and that trustworthiness is very important. Invest in someone with a track record of success in the space you're investing in. This part is really, really important. So I'll use myself as an example. Like, I've been in e-com for 20 years. And if I were raising money for an e-com endeavor that I'm currently doing, some of you might feel safe in investing in me because I know what I'm doing in e-commerce. But if I just had an idea to start a diamond mining business or something ridiculous like that, even though I was successful in another space, doesn't mean I'm going to be successful in this new space, because what the hell do I know about diamond mining? So investing in somebody with a track record of success in that space is really important. And then number 3, invest in a business you fully understand. Again, that to me eliminates like the vast majority of startups. I get decks all the time. If I read through them and the business can't be explained to me like I'm 5 years old, I'm not going to invest. So where do I source deals? I mentioned it earlier. The Entrepreneurs Organization is a global network of entrepreneurs. I've been a part of that for 12 years in Seattle, New York, LA, and San Diego. It's just an awesome group of individuals who have built really extraordinary businesses and are really smart and kind and driven. Online business forums like ECF is, look around you. This is a target-rich environment of geniuses. Really, really great a community to meet, befriend, and possibly partner up with a really smart person. And local business networking. I'm very involved with my local business community wherever I'm at. My MO is I go to events, I get introduced. I'm naturally very curious and very interested in hearing people's stories. And if I meet someone that I'm vibing with, I get their information. I take them out to lunch. And at a minimum, I just get to make a new friend and learn an awesome story. And then maybe out of that will come an opportunity, an investment opportunity in the future. Be patient. I was thinking about what this might be like. Like if I were in an audience and sitting in on a talk like this where somebody's talking about making $400,000 a year in passive cash flow, I'd be like, great, good for that chump. And I think it's important to remember that what you're seeing here, I have condensed 15 years of trial and error in a 25-minute talk. And this didn't happen easily or quickly. This was, as I said earlier, just a bunch of small base hits. And so really important, like you work so hard for your money, be patient before you let it go. Wait for the right opportunity and take it one opportunity at a time. And I know for those of you who are inspired by this, like the mountain may seem far and steep, but just a reminder to take it one step at a time, one little win at a time. You make a $10,000 investment that earns you 10%, that's a win. And those wins will compound over time. And I promise you, if you stick with it and you're patient and you're kind to yourself, you'll look back in 10 years and be proud. You will make mistakes. Like I made mistakes. I made a lot of mistakes. Be kind to yourself. I was extraordinarily cruel to myself, and don't do that. Be kind and be gentle on yourself. No one bats 1,000, and I certainly haven't. And there are going to be bumps, and just enjoy the ride because it's a lot of fun. So I want to close out by saying I'm extraordinarily grateful for this community, and I have a lot of love and respect for the entrepreneurial path. I know firsthand how difficult it is to lay it all on the line and fight for your employees and your family, and just how difficult it is. And the idea of working hard for your money and letting go of that could be super scary. I get it. I love you guys, and I'm here to help in any way I can.